bring in Morgan Stanley's Ben Swinburne and Morningstar's Neil Macker. Ben, let me start with you. I read your note this morning. On the cost side here, I thought it was interesting that you did raise what you estimate in terms of at least will be Disney's need to ramp up content and therefore the content spend. How does that figure into your overall view of the company and its prospects?
Look, I think at the end of the day, if you own Disney stock, and obviously today with the pullback, we think it's gotten more compelling, you believe they can build a big and profitable streaming business. And so the prize, as we highlighted in the note, is that as we move out of 2024 and beyond, that is a big business with real scale and real profitability. The cost to sort of scale to that point, if it's 10 billion instead of 8 billion in the grand scheme of things, I don't think is a thesis changer for the stock. So I'm not shocked. I think the key is that they deliver on the top line to make the stock work rather than the cost to get there.
Right. You called your note the cost of doing business. You still have it as an overweight. Why?
Well, I think if you go back, David, a year ago, between November and the end of the year, we had the vaccine news, we had their investor day where they raised guidance. Disney added $100 billion of value in basically 2 months. And that's the market pulling forward and pricing in a lot of success. I think you fast forward to today, as you can tell from the stock and what you read and research, there's a lot of skepticism. So in terms of what's priced in, I really think now, if they can deliver on their outlook, you can make real money in this stock. And the risk reward's actually gotten pretty compelling. Compare Disney to Netflix. Netflix is trading nearly at 30 times 2024 earnings. Disney, as of today, is cracked below 20 times. And we believe that Disney has the brands, the IP, and frankly, the track record, having gotten to 120 million subscribers already in just 2 years, to execute on their vision.
Yeah. Neil, you seem to be one of those skeptics. You've got a hold rating on Disney. What did you think of the results, and is there anything that would change your mind on that?
Yeah, I think from my point of view, I agree that Disney has a great set of IP and things like that. I thought the results were largely in line with sort of expectations. A little weaker, obviously, on the sub number here, but as I said in my note, you look at the number of subs that Disney's put up over the last year versus Netflix. They've tremendously outgained them in that area, and they're still adding names there now. One of the reasons we're hold is what Ben just talked about here, is we do think there's been a large pull forward of the value here. And while we like, at our fair value of 170, we think that, holders should still hold the name. We do think that we'd look for a little bit more clarity on, how quickly they're going to ramp out some of these other names and how quickly the local language content will be spread over a number of countries. Remember, Disney's already been making a ton of local language content in their India and the Hotstar one. Is it all going to be mostly in India? Are we going to see more things in Korean, in Mandarin, Japanese, Spanish? Where is this local language coming from? And we think that's going to be a big point of focus going forward for the company in terms of how they're going to build out and compete with Netflix and Amazon around the world.
So let's just dig into that a little bit more, because it does seem like, and we've certainly been talking about this really ever since the rollout of Disney Plus, that is the narrative, the dominant narrative for the stock. But Neil, the other businesses are showing signs of recovery because Disney, after all, is a media conglomerate, right? You're seeing the recovery taking root in the theme parks. You're seeing it with advertising around sports programming coming back as well. You're seeing it with theatrical releases. Why is that being overshadowed by the Disney Plus narrative and the fact that we have seen this pull forward and slow down in subs?
Yeah, but I think that's, if you look back at Disney over the last 5 years, that there's always been sort of an overwhelming narrative that takes over the media piece. Go back 5 years ago, it was how are linear subs doing in the United States? Worrying about cord cutting and things like that. Now it's streaming, and that seems to be what's pulling forward. Look, we think that the parks business is on a way to recovery. We are still a little worried about the linear business, not as worried as, let's say, people were 5 years ago, but you are still seeing declines in subs there, and that's still a large part of their business, especially on the sports side. How are you going to manage that transition to ESPN Plus and get those, $7, $8, $15, from the total Disney package from the cable distributors? How are you going to get that directly for consumers?
Yeah, Ben, it isn't that long ago that we did focus a lot on ESPN subs and the loss of those subs. Is that still a concern to you? Where do we come down on sort of where they stand right now in terms of the linear networks, which continue to generate an important part of the cash flow for the company?
Yeah, they paid the bills, David, and I think particularly as they're burning cash in streaming, owning those assets is quite a positive. I'd rather have those than not have those, given where they are in the cycle. and particularly with sports. I mean, again, as we think about the streaming landscape, our view globally is that we have 1 billion pay TV households moving to streaming over the next, call it, decade plus. Sports is a huge part of that market. And it's actually an area, again, just to compare to Netflix, that Netflix is not in and Disney is in. I'd much rather be making the pivot into sports streaming, owning ESPN, than not. So it's a cash cow. There's no growth there, but that's not a big shock, I think, to anybody.
Shepard Smith here. Thanks for watching CNBC on YouTube.